It always gets me, you know how S&P 500 just seems to keep going up?
Yeah.
Like pandemic, war,
Right.
crazy inflation, like it doesn't matter.
Yeah,
It always seems to find its way back up.
it does.
Do you ever feel like there's some kind of secret sauce we're missing or something?
Well, there's no secret handshake or anything,
Okay.
but there are definitely some key forces
Yeah.
at play that make the S&P 500 behave the way it does.
Right.
And, understanding them can be really helpful, especially when you're just starting out with options trading.
Yeah, totally.
Yeah.
So before we get into the weeds of how it all works,
Yeah.
let's start with the basics.
Yeah.
Why is the S&P 500 such a big deal anyway?
Right. So think of the S&P 500 as like a snapshot of the U.S. economy's health.
Okay.
It tracks 500 of the biggest publicly traded companies in the U.S.
Right.
So, when those companies are thriving,
Yeah.
it's generally a sign that the economy is in good shape.
Okay.
And that tends to push the index higher.
Oh.
But it's not just about the U.S. either.
Right.
Because these companies are so massive and globally connected.
Yeah.
The S&P 500 can actually be a pretty good indicator of the global economy, too.
Oh, okay. So it's like this giant economic barometer?
Exactly.
But how does that translate to actual stock prices going up?
Well, a healthy economy usually means that businesses are making more money, right?
Right.
So their earnings increase, investors get excited,
Right.
and that drives demand for their stock,
Okay.
pushing prices higher.
Right.
And since the S&P 500 is made up of these, successful companies,
Yeah.
the index as a whole goes up along with them.
Right. That makes sense.
Yeah.
And it's not just about individual companies either, right?
Right.
The S&P 500 itself is a benchmark.
Exactly.
And everyone from everyday investors to
Yeah.
huge institutions use to track performance, right?
Absolutely. It's like the measuring stick against which all other investments are compared. So
Wow.
whether you're managing your own portfolio
Well,
or running a hedge fund,
yeah.
you're looking at the S&P 500 to see how your returns stack up.
Okay, so healthy economy,
Right.
strong companies,
Uh-huh.
stock prices rise,
Yeah.
S&P 500 climbs.
Exactly.
Seems pretty straightforward so far.
Yep.
But I have a feeling there's more to this story.
Oh, yeah.
Right.
There is.
Right.
One of the biggest drivers,
Yeah.
and this is something that surprised me when I first learned about it,
Oh, okay.
is the role of foreign investment.
Foreign investment.
Yeah.
How does that play into the S&P 500 going up?
Okay, so it all comes down to money flow.
Okay.
The U.S. often runs a trade deficit,
Right?
which basically means we're buying more from other countries than we're selling to them.
Right.
So tons of U.S. dollars end up overseas.
Okay, yeah, I've heard about the trade deficit, but what happens to all those dollars?
Yeah.
Floating around in other countries?
Well, here's the thing.
Yeah.
The U.S. dollar isn't just any currency.
Okay.
It's the world's primary reserve currency.
Right.
That means that other countries and businesses often hold on to those dollars because they're seen as safe and stable.
Okay.
But they don't want them just sitting there.
Right.
So they invest them.
Okay.
And guess what? One of the most attractive investment options is?
The S&P 500.
You got it.
Oh, wow.
Yeah.
No.
It's seen as relatively stable
Right.
and a pretty solid bet for long-term growth.
Hmm.
So those dollars often flow right back into the U.S. market,
Okay.
boosting demand for S&P 500 stocks,
Yeah.
pushing the index even higher.
Wow. So even though we're spending more on imports,
Right.
those dollars end up kind of coming back to us.
Exactly.
Like a boomerang.
Yeah.
Fueling the S&P 500's rise.
It does.
That's wild.
Yeah.
Is that all, though? Or there are other factors at play?
Oh, there's more.
Okay.
Remember quantitative easing, or money printing, as some people call it.
Right. The Federal Reserve pumping money into the economy.
Exactly.
But how does that tie into all of this?
Okay, so when the Fed prints money,
Yeah.
it essentially increases the supply of dollars,
Okay.
which makes it cheaper to borrow.
Okay.
This can stimulate spending and economic activity,
Uh-huh.
but it can also lead to more imports, which, as we discussed, sends even more dollars overseas.
Right. Right.
And you guessed it, a lot of those dollars often find their way back to the U.S.,
yeah.
invested in assets like the S&P 500,
Okay.
driving demand even further.
Okay. My head's spinning a bit.
Yeah, it's complex.
Yeah. It sounds like this whole system is designed to keep the S&P 500 moving upwards.
It's definitely a complex interplay of factors.
Yeah.
But it's not just about macroeconomic forces,
Right.
The companies in the S&P 500 themselves
Yeah.
have a big impact
Huh.
on this upward trajectory.
Oh, right. They're often at the forefront of innovation, constantly adapting and changing.
Exactly.
So how does that contribute to their growth
Yeah.
and ultimately the growth of the S&P 500?
Well, think about it.
Yeah.
To stay competitive, these companies have to be on the cutting edge,
Right.
embracing new technologies, anticipating what consumers want,
Right.
and sometimes even completely reinventing themselves.
Right.
Yeah.
Got any examples of that? Like a company that's really gone through a major transformation?
Sure, take Amazon, for instance.
Oh, yeah.
They started as an online bookstore,
Right.
but quickly expanded into selling pretty much everything under the sun.
Yeah.
You know, that ability to innovate and adapt
Right.
is what keeps many S&P 500 companies ahead of the curve and growing over time.
Yeah, that's pretty incredible. So we got economic growth, foreign investment,
Right.
innovative companies. It's all starting to make sense.
Yeah.
But there's one more piece of the puzzle I'm curious about.
Okay.
We mentioned earlier how Wall Street analysts often underestimate company earnings. Why would they do that?
Right.
It seems kind of counterintuitive.
It is. It's a bit of a game, honestly.
Like,
Analysts often give conservative earnings estimates, which sets the stage for companies to beat expectations.
oh, so it's like they're setting a low bar so companies can easily jump over it
Exactly.
and impress investors.
Exactly. There's a few reasons this happens.
Okay.
Sometimes companies themselves give conservative guidance to analysts,
Okay.
and analysts have an incentive to underpromise and overdeliver.
Right.
It makes them look good if they consistently predict earnings beats.
That's fascinating. And what about the impact on the market?
Yeah.
Why are these earnings beats such a big deal?
Well, beating earnings estimates is often seen as a sign of strength,
Right.
which can boost a company's stock price
Okay.
and create a wave of optimism
Right.
among investors.
So it's like a self-fulfilling prophecy.
Yeah, kind of.
Low expectations lead to surprising earnings beats, which drive up stock prices. It all sounds a bit manipulated, doesn't it?
It's certainly a dynamic worth understanding, especially as an investor or a trader.
Yeah.
You know, knowing how these mechanisms work can give you a deeper insight into how the market operates.
Right.
And help you make more informed decisions.
That's a really good point.
Yeah.
So we've covered a lot of ground here.
We have.
Economic growth, foreign investment, innovation,
Right.
even the psychology of earnings estimates.
Mm-hmm.
Are there any other major factors that contribute to the S&P 500's upward trend?
There are a couple more things that are really important to keep in mind.
Okay.
One is the reinvestment of profits.
Okay.
Companies often use their earnings to buy back their own stock,
Right.
which can decrease the number of shares available and increase their value.
Okay.
They also reinvest in expanding their operations,
Right.
acquiring new businesses or developing new products,
Right.
all of which can contribute to long-term growth
Okay.
and potentially drive up stock prices.
Right. That makes sense.
Yeah.
Companies that are constantly reinvesting in themselves are more likely to succeed in the long run.
Exactly.
Okay.
And finally, we need to talk about something called survivorship bias.
Survivorship bias.
Yeah.
What's that?
So the S&P 500 isn't a fixed list of companies. Companies that underperform or lose significant market capitalization can be removed from the index.
Oh.
And they're usually replaced with companies that are doing better.
So it's kind of like survival of the fittest
Yeah.
in the corporate world.
Exactly.
Only the strongest companies make it into the S&P 500.
That's a great way to put it.
Okay.
This constant filtering process means the index is inherently skewed towards growth.
Okay.
It's a self-selecting group of companies that are, for the most part, on an upward trajectory. And that in itself contributes to the S&P 500's tendency to climb higher over time.
Wow, this has been incredibly eye-opening.
Yeah, there's a lot.
It sounds like all these factors are working together to push the S&P 500 upwards.
It's a complex interplay of forces.
Yeah.
But understanding how it all works can be incredibly beneficial.
Right.
Especially for those who are interested in options trading.
Speaking of options trading, how does all of this knowledge actually translate to making smarter trading decisions?
Yeah.
That's what I'm really eager to understand.
That's a great question, and it's exactly what we're going to dive into next.
Okay, perfect.
So we've explored all these fascinating forces that drive the S&P 500's upward tendency. Now let's connect the dots and see how this knowledge can give you an edge in the world of options trading.
That's what I've been waiting for.
Yeah.
I'm starting to see how it all ties together.
Right.
But I'd love to get into the specifics of like how this understanding can actually translate into better trading decisions.
Absolutely. So when you trade options, you're essentially making calculated bets on the future price movements of an underlying asset, which in this case could be, the SP 500 itself via an ETF like SPY.
Right.
And the beauty of options is leverage.
Right.
You can control a larger position with a smaller amount of capital. If you know that the index has generally moved upward over time, you can factor that into your options trading strategy.
This is starting to click for me. But I know it's not as simple as just blindly following the historical trend. Right. There are other factors to consider. Short-term fluctuations, things like that.
You're absolutely right. Past performance doesn't guarantee future results.
Right.
The market is always full of surprises.
Yeah.
And there are countless other variables that can influence the S&P 500's movements in the short term. Economic data, geopolitical events, investor sentiment, it all plays a role.
So it's not about guarantees.
Right.
But about probabilities.
Exactly.
This knowledge helps you assess the odds more effectively.
Exactly. Options trading is all about making calculated decisions based on the information you have available.
Right.
Understanding the long-term tendencies of the S&P 500 gives you another layer of insight, another tool in your toolkit to help you make smarter trading decisions.
It's like having a compass that points you in the right direction.
Yeah.
But you still need to be aware of the terrain.
Right.
And adjust your course as needed.
That's a fantastic analogy. And it's particularly relevant when we think about survivorship bias, which we discussed earlier.
Right.
Remember how the S&P 500 constantly evolves?
Yeah.
With underperforming companies being replaced by stronger ones?
Right. It's like a self-selecting group of winners.
It is.
But how does that specifically impact options trading?
Well, it's important to remember that this survivorship bias contributes to the S&P 500's upward trend. The index isn't just passively reflecting the market.
Right.
It's actively curated to include the companies that are most likely to grow.
So it's not just that the overall market tends to go up over time.
Right.
But the S&P 500 itself is structured in a way that amplifies that upward movement.
Precisely. And that's something to keep in mind. When you're evaluating your options trading strategies, it's not just about betting on the overall market sentiment. It's also about understanding the inherent dynamics of the S&P 500 itself.
That's really insightful.
Yeah.
So for our listeners who are new to options trading, what are some of the key takeaways here? How can they actually apply this knowledge to their trading decisions?
One of the most important takeaways is to think long-term. The S&P 500's historical upward trend suggests that over time,
the market tends to favor growth. This could be really helpful when you're deciding whether to buy or sell options and how to structure your trades.
So if you're generally optimistic about the market in the long run.
But it's crucial to remember that this upward trend isn't a smooth, predictable path. There will be bumps along the way, periods of volatility, and even market corrections.
Like that sudden drop we saw in 2020 when the pandemic hit.
Exactly.
It's a good reminder that even with this long-term upward bias, things can change quickly in the short term.
Absolutely.
Right.
So while it's helpful to keep the long-term perspective in mind, you always need to be prepared for short-term fluctuations. And manage your risk accordingly.
Okay, that makes sense.
Yeah.
So it's all about finding that balance.
I feel like we've covered so much ground.
We have.
In this episode.
Yeah.
And I have to say, I'm feeling a lot more confident.
Good.
About navigating the world of options trading.
That's great.
We started by looking at the S&P 500 as this like big mysterious entity. And now it feels like we've like peeled back the layers.
Yeah, exactly.
And revealed the inner workings.
It's all about connecting the dots. Understanding the economic forces, the psychology of the market, and how it all ties together. And for options traders, that knowledge is truly empowering.
Couldn't have said it better myself.
Good.
So as we wrap up, what's the one key takeaway you want our listeners to walk away with today?
The most important thing to remember is this. The S&P 500 isn't just a random collection of stocks going up and down. It's a dynamic system with its own unique tendencies, biases, and patterns. And by understanding those tendencies, you can gain a real edge in your options trading.
Amazing advice.
Thanks.
And for our listeners who want to explore this even further, you can check out the options trading services we've created at advancedautotrades.com.
Yeah, we've poured our years of experience and expertise into building these services.
Right.
And we think they can be a game changer for both beginners and more seasoned traders.
Well, that brings us to the end of our exploration into the S&P 500.
It does.
We hope you've enjoyed the journey.
Yeah.
And gained some valuable insights along the way.
Absolutely.
If you enjoyed this episode and want to stay ahead with fresh insights every other day, don't forget to hit that subscribe button or follow our podcast. We've got more exciting content coming your way, and we can't wait to have you back. See you soon.